anytime, we are going to start our webinar right now. So before we start, just a small risk disclaimer for you guys and for everyone. So the webinar information provided in this webinar by Pew Prime as well as me is only intended for educational purpose only and does not constitute financial advice. Trading and investing involving significant risk of loss and may be not suitable for all investors. Always conduct your own research and consult with licensed financial advisor before making any investment decisions. And just a kind of reminder, CFD tradings can be considered as a very high risk investing platform. So please feel free to have a very good risk management before you enter all of the trades. So, all right, so we are going to start the webinar right now. In today's topic, we are going to discuss about what will be happening in the 2024. So in future basis, in the next 7 months, what is the global traders need to be focused on it? How can you more careful, and then how can you understand the latest fundamental in the market and then enhance your trading strategy? So in tonight's webinar, we will try to update you guys on what is the most important things that global traders need to learn and know about the 2024. So in future, when you notice on certain news like that, you're able to react to it and then readjust your portfolio with more confidence. So this is the highlights that we are going to cover tonight. The first thing that we'll talk about, maintain on the Middle East tensions. As you guys know, recently we do have the Middle East tensions can be considered very serious. There are geopolitical risks in the Middle East due to the Israel as well as the Hamas war. And then this is the things that will able to affect the global economy, especially the oil market. So later we will try to let you understand that how will the Middle East tensions affect your investment strategy, like how can the Middle East tensions affect the significant fluctuations for the oil market. Next things that we will talk about should be maintained on the Federal Reserve policy. I hope that you guys have been noticing news regarding on the Federal Reserve member suddenly come out and provide certain statement regarding on increasing the interest rates, cutting the interest rates, or even maintain the interest rates. And then the Fed member sometimes we also mentions about what's going on in the US economics outlook, and then what is the inflation status in the United States. And then normally when the Fed member, especially the Fed Chair Jerome Powell, come out, when he gave the statements, it could be affect a significant movement in the market, especially for the dollar as well as for the gold market. Later, I will try to let you see the impact of the Federal Reserve member statement and then try to link those impact towards the market. We are using the fundamental as well as technical analysis later after our main topic. And then the third thing should be regarding on the China stimulus plan. If you guys notice, in the early 2024, the overall, especially the Chinese equity market are performance are very bad. But after that, after the China implement a lot of stimulus plan to boost up the economic growth in China, you can notice, especially for the Hang Seng Index, is actually increased aggressively. So this is the Hang Seng Index. Later, I will let you understand that what happens for the Chinese equity market, the Hang Seng equity market previously, and then what's the China authority to do, what's the stimulus plan that caused this Hang Seng Index rebound sharply in the 2024. Later, I will also brief you guys that what is the future basis for Hang Seng Index also, which is also one of the key important news, because Chinese economics recovery can consider as another big deal in 2024, especially after the COVID-19 recovery. And then by the end of the webinar, we will try to combine the fundamental as well as technical analysis and then do a real life analysis for you guys to able to understand it, able to apply the things that we discussed previously, like Middle East tensions, Fed policy, China stimulus plan, and then try to apply it towards the market. So we really hope that this this can consider a very important things that we need to understand in 2024, and we really hope that you guys able to learn from it and then enhancing your trading strategies in future. All right, so the first thing that we are going to discuss about is oil market. So if you just talk about the Middle East tension, some of the new traders might be confusing. But before we talk about the Middle East, we need to understand that what is the oil market and then why several traders like to trade the oil market, and then what will be the biggest impact that will cause the big fluctuations for the oil. All right, so the first thing that we are going to talk about should be maintained on why, and why is the reason that we need to trade on the oil. So the first reason is because oil can consider it will affect the global demand. The global demand is essentially going to affect the oil prices. No matter what you do every day, you will able to consume oil indirectly. For example, you want to pump petrol, you want to travel around the world, and then you are going to use some of the industry products, so you're able to touch the oil. But what is the most important thing in the oil that the traders need to be understanding is oil can consider as one of the very, very important economics indicator in the world. For example, if you guys do remember during COVID periods 2020, the overall oil movement is actually dropped aggressively. One of the reasons is because of lockdown. Nobody is going to travel around the world. But another main reason that caused oil drop aggressively should be regarding on the economic growth of slowdown. The global economic stagnates in 2020, and then until now, it just recovered back. So oil can consider one of the indicators that will highly affected by the economics progressions. So I will explain it in the layman terms so you guys are able to understand it easily. So for example, if the global economic growth are very slow, everyone are quite poor. Your salary the boss cuts your salary. Some of the people might not even getting the jobs. So when global recessions are coming, economy are not good, a lot of people are not getting paid. Of course, this will reduce the oil demand, because when you are not getting paid, you are not going to travel around the world. You might just stay at home and then do anything that doesn't cost you a lot of money. So of course, when recessions come, no people is going to travel around the world. Oil demand will slow, and then oil price will drop aggressively. In a very, very short term is when economics bad, normally oil price is going to drop. And then so I think that after the COVID-19 recovery, global economy is actually growth very fast. And then you can notice that the demand for oil is actually slowly to catching it up. And then in future basis, if you just a kindly reminder that if you guys remember, after the COVID-19 recovery, the oil price is actually increased from the $6, even increased until more than $80 to $90. But recently, the oil price dropped back because that we can notice the global economy already start to slow down as compared to previous. But one of the historical proof that when COVID-19 and then slowly economic recovery, the oil price is actually one of the major investment that the global trader is going to focus on it, because it links towards the economy. So when you feel that in future basis, if the economy is very good, and then you're not sure what you want to invest, of course, you can consider US equity market. You maybe also consider gold market, but normally some of the investors might prefer that when economy is getting very good, one of the best investment that they might be consider should be the oil, because good economic recovery will benefiting the oil. This is what we call the global demand. And then of course, from demand side, you already understand that oil link towards the economy, but what is the supply side? Because what's actually moving the commodity price is actually demand and supply. So demand, you already know, because demand linked towards the economy. But what is the supply front? So supply fronts, you need to understand a few things like the Middle East tensions, because Middle East can consider one of the major oil exporter around the world. They are the one that sell a lot of oil towards other countries. When there are tensions over certain country in the Middle East, it might be affect their oil effectiveness for them to export their oil. So for example, if Iran can consider one of the major oil exporter around the world, but because sometimes due to some tensions between Iran as well as United States, sometimes US might even implement a sanctions on Iran. So when sanctions, in other terms, is something like tax. So when US implement tax on Iran, it means that when Iran want to sell oil towards other country, they need to pay a lot of tax. So of course, it will cause them to export their oil lower. And then of course, another latest news should be regarding on the Russian and Ukraine war. Russia can also consider one of the major oil exporter around the world. But due to these tensions between Russia and Ukraine, a lot of EU as well as US country are actually supporting Ukraine. How are they going to supporting it? They are supported by they do not purchase oil from Russia. So of course, when when Russia not able to export their oil towards all the EU country or the US country, of course, the supply from Russia should be reduced. So when supply is declined, normally it will boost up the oil prices. So to put in a simple term from supply side is when there are geopolitical events like Middle East tensions, Russia and Ukraine war, and or maybe others major oil exporter countries that are suffering from something like geopolitical tensions, supply disruption risk. This is a thing that will normally cause the oil prices to go up. So this is also another one of the good important fundamental that we need to understand on it. So remember, oil linked towards economy, but it's not purely on that. Only demand for the oil will link towards the economy. But on supply side, you need to bear in mind that the Middle East tension you need to take into your analysis, and then you need to also understand that the Russian-Ukraine war, or another thing should be regarding on the OPEC production cuts. All right, so let's see what global traders need to focus in 2024, especially for the oil traders. So I know that you guys might be also notice the news regarding on Israel and Hamas war, US-Iran tensions, Russian-Ukraine war, and then this is actually the major things that caused the oil price increase aggressively during the early periods of 2024. So the first thing that we are going to talk about the Israel and Hamas when the war are launching, because Israel can also consider one of the major oil exporter around the world. A lot of countries want to punish the Israel. That's why they restrict the oil exports from Israel. So the first thing is actually cause the oil prices to increase aggressively. But as for now, the tensions between Israel and Hamas might start to slow down and ease down already, so the oil price start to drop back. Why we mentions that Israel and Hamas war, their tensions start to slow down? Is it because of recently we do notice that Israel is actually proposed a lot of ceasefire deal with Hamas. They are in the discussions on a ceasefire deal. So in 2024, the global oil traders need to focus on what will be their relationship going on. So if both parties agree on a ceasefire deal and then they decide to stop firing with each other, then the risk of the supply disruptions will be declined. So when the fears upon supply disruptions decline, means they're able to supply more oil into the market. This is a thing that might be also lower down the oil prices. So when you notice news regarding Israel and Hamas, they already signed the ceasefire deal. One of the considerations that you need to focus on, maybe the oil prices might be dropping because the fears upon the supply disruptions are no more. And then the next thing should be regarding on the US and Iran tensions. Recently, we noticed that the relationships between US and Iran are not very good. And if you ask me whether the US is going to attack Iran, according to historical experience, I don't think the US is going to do it. What will the US normally punish Iran or do certain thing about Iran is by implementing the sanctions. As I mentioned just now, sanctions can consider one of the tax that the countries need to pay when they want to export towards other countries. So when US implements sanctions on Iran, means when Iran want to export their oil to global investor, all right, when Iran want to export oil towards global investor, they are limited to it. because US is going to tax it. So if these things happen, if you notice in future basis, you notice news regarding US decide to implement sanctions on Iran, then Iran will export lesser oil, so supply for oil will decline. This is the thing that normally will cause the oil prices to go up further. So this is also one of the things that you need to understand on it. Major thing is very important. And then Russia and Ukraine war will also add towards oil market volatilities. And because recently even though the war are still ongoing, but because the updates regarding on this war have become lesser and lesser already, so some of the oil trader might not react to it, but it doesn't mean that these things is already finished. So in future basis, if you notice any news talks about the Russian and Ukraine war become very intensified in future, then maybe you can also consider that in oil trading. All right. So Russia and Ukraine war, even though it's already the news not reports regularly anymore, but this is also the thing that the traders need to be understand on it. All right. Later, we will also explain about what's going on in the oil market, because if I show you the charts for the oil, you will notice that the oil is actually experiencing a significant fluctuations recently. Previously, due to the war issue, the oil price is actually increased aggressively. But after that, due to some ceasefire deal, the oil price start to dropping further. And then you can notice that currently the oil price is actually consolidated in the zone, because traders are still struggle to seek a good directions for the oil. Later, we will talk about it, about the mixed fundamental for the oil market in the future. All right. And then let's continue in the slide. And then the next thing that we are going to talk about, which is also another very important thing, is regarding it. What is the US economics outlook? And then when US economics outlook is good, how can you do your investment? Because normally if investor think that US economics outlook is good, they might normally invest in the US dollar. But of course, you can also cannot rule out the things that another important thing should be regarding on the Federal Reserve policy outlook. Later, I will also update you guys, like give you a brief about what's happened recently, what is the Federal Reserve policy recently, and then how can it affect the movement for dollar. And of course, US economics outlook as well as the Fed policy is not just going to affect the US dollar, it's going to affect multiple asset classes. Dollar is one of the key things. Then the next thing is regarding the gold market. And then after you understand dollar as well as the gold markets, the next thing maybe we also talk about the US equity market if we still have time later. So let's continue with our US economics outlook as well as the Federal Reserve policy, and then try to link towards the movement for the US dollar. So the first thing is how and what is the economic situations now in the United States. So according to the latest data, the last 2 weeks data, last 3 weeks data, the data in May, we can notice that a lot of the crucial economics data, especially US CPI data, US non-farm payroll, US unemployment rate, as well as US GDP data, most of the US economics data are actually indicating a much worse than expected reading. And then you can notice the US CPI data is actually came in at 0.3% in April, worse than the market expectations. US non-farm payroll, 1,175K. US GDP is 1.6%. So for those who have joined us for our US non-farm payroll webinar, you can notice that the huge fluctuations for the US market as well as for the gold market. So if we just mentioned that recently most of the US economics data is bad, so let's look on the US dollar movement. You can notice that overall since May, you can notice since May, after all of these US economics data show a quite pessimistic reading, dollar start to drop aggressively, but recently it's rebound due to some Federal Reserve statement. So it just once again proved that the global investor as for now will highly focus on the US economics data. Compared to our previous trades, in 2020, global investor will maybe ignore the economics data, but what they are going to focus on should be maintained on the COVID-19 historical thing, whether the COVID-19 is going to recover and when will the lockdown being implemented, if you guys remember. And then the vaccine the COVID-19 vaccine is the main focus for the global investor in 2020. But in today's world, 2024, because the COVID recovery already done, no more, the next things that investors need to be focused on should be maintained on the economics data. So a lot of traders might be more focused on economics data compared to the previous 2020, 21, and 22. That's why as a global trader in 2024, you need to understand, you need to try to understand what should be the very important US economics data that we need to eye on it and try to adjust our portfolio. So when you notice that a lot of US economics data are actually showing a much worse than the market expectations, normally dollar is going to drop aggressively and vice versa. If you notice that US economy already start to recover, then of course, this is the thing that might be push up the gold market. The key things that you need to understand is investor as for now will more focus economics data compared to a previous one. Previous after CPI, after NFP data release, normally the movement, especially for gold and dollar, will very slow during the COVID-19 period. But compared to now, because no much more news that investor can focus already, so the movement after the economics data release are very huge. You guys can experience it, and maybe you can also join our non-farm payroll webinar during next month. And then not only the economics data that we need to understand for the US economics outlook, another big thing in 2024 in the global market trade is US elections, US presidential elections. So this is also another key thing. But before the US elections, data can consider one of the major things. But when the US elections are launching, then traders might focus from economics data performance towards the result of the US elections. So we need to adapt and change our trading strategy every day. There is not fixed strategy like I just understand one thing, then I can apply this trading strategy in next year, next 2 years. No, there is no such thing as one trading strategy. As a traders, we need to understand what is the global investors, what is the institutional investor are thinking on it, and then keep ourselves on updated. So in 2024, maybe next 2 to 3 months, what investors are focusing on should be maintained on the economics data performance, unless there are some sudden war happens that are unpredictable. But if not, economics data is one of the key things that you need to understand. So US CPI data, especially inflation data, US non-farm payroll, US jobs report, US GDP is one of the crucial things that we must be understand on it. All right, try to understand it. It will definitely benefiting you in the future trades. So after you understand the US economics data, what is the next things that you need to focus on it should be maintained on the Federal Reserve. So for those new traders, you need to understand, some of you guys might don't know what is the Federal Reserve. Put it in the same simple term is Federal Reserve can consider one of the US central bank. They will decide whether they want to bring more money or bring lesser money in order to control the interest rates. So when they are controlling the interest rates, they will use the interest rates to stabilize the inflation. So for example, if the US inflation is very high, for example, the CPI data is very high, inflation is high in the US, people might be suffering. So for those new traders who don't understand what is inflation, you can understand in the simple words. It's like inflation is the goods and services that you want to buy every day. The things, the prices of the goods that you want to buy. So assuming that inflation is very high, but in others way that your salary are not able to catch up. It's what we call the GDP growth, might not able to catch up the inflation. So your salary increment are very less, but the things that you want to buy, the price are keep increasing, then of course, a lot of people will be suffering. So the US or the global central bank will decide to do one move in order to reduce people suffer. So what they are going to do is by increasing the interest rates. So when they increase the interest rates, the price is going to going down. Why? It's because of two ways. When you are increasing the interest rates, the global economy will likely to slow down. Your boss is not going to increase the price anymore because he's suffering. Because when interest rates are increasing, the borrowing cost should be increasing also. So they are not going to have a business expansions. Consumer spending will become lesser because when interest rates is higher, you are not going to purchase house, right? Because you need to borrow more money from the banks in order for you to purchase house. So of course, housing prices might be dropped due to high interest rates also. But the thing is, you need to understand the theory between inflation as well as interest rates. But as a traders, what we need to understand, you need to understand that when the Fed say they want to increase the rate, or the Fed say they want to decrease the interest rates, what is the things that you need to do? So you need to understand that normally when the central bank decide to increase the interest rates, their currency will normally going up one, because you can think interest rate as a risk-free investment, so saving rate. So as comparison, I want to save money in Singapore or Thailand. For example, is Singapore offering you maybe like 10% interest rate, example, but Thailand offer you 1% of the deposit rate or saving rate. Of course, you will try to save money in Singapore banks, right? 10% in order to gain a 10% of the interest. You save $1,000 in Singapore, you get 100. You save another $1,000 in Thailand, you might only get $10. So a lot of investors might try to save money in Singapore, so then they will convert their currency and then save in Singapore. That's why the demand for Sing dollar will increase. And then in others wise, in the shorter term link is, when the interest rate is high, it will attract a lot of people to save money in their countries, their currency will normally go up. To cut it to shorter, it's like high interest rates, currency will normally going up. So when the Fed say they want to increase the interest rates or maintain a high interest rate, dollar might be going up. And if the Fed say they want to cut interest rates, then dollar might be going down. So I hope I clarify it. All right. So what is the Federal Reserve plan in future in 2024 is also the key things the global investor need to be focused on it. Look, if you are going to look at the dollar charts, during 2023, you can notice that the dollar is actually dropped aggressively, significantly. And in 2024, dollar start to rebound back. So the overall reason why is the dollar drop aggressively in 2023 is because of the Federal Reserve members, their statement. Because after the COVID-19 recovery, the Fed is actually increased the interest rates aggressively in 2023. So because inflation are too high after the COVID-19 recover, a lot of people come out and spend their money aggressively. That's why you can notice all of the price of goods sold are increasing, the price are increasing, that's why inflation are high. So as a Fed member, they want to stop it, they start to increase the interest rates. That's why dollar increased aggressively in 2023. But by the last quarter of 2023, dollar is actually dropped back. The whole reason why dollar dropped aggressively is because of the Fed member is actually keep mentioning that in 2024, there will be high chance cutting interest rates. They forecast, the Fed actually forecast that they might even cut the interest rates more than 3%. So when all of these statements coming out, even they haven't cut it, but they just said they are going to cut it, you can notice that dollar is actually dropped. Until recently, in 2024, when it come back, dollar start to slowly rebound back. Why? It's because of the Fed members suddenly changed their statement, saying that in 2023, they want to cut rates. But after 2024, they mentioned that the economy are still hot in the United States. The price of goods sold still very expensive. The post-COVID recovery are better than expected. A lot of people are still aggressive buying their stuff. That's why the price are very, very expensive around the world. When the price are expensive, they are not going to cut the interest rate, and they might be even increase or maintain a high interest rates environment. So of course, when 2024 things are not aligned with the Federal Reserve expectations, that's why they changed their statement. They say they want to increase the interest rates. That's why dollars start to rebound back. So the Fed's member statement is also the key things that you might be focused on it. But of course, a lot of Fed members are mentioned in June, in September, they will like to cut the interest rate. And then you can notice the dollar structure now start to drop back, because investors now shift their focus and predict that the Fed might be cutting interest rates now. If you go through most of the analysis, the statements from the Fed, they are keep mentioning things like that. They will cut interest rates. They might be cutting interest rate in 2024 because inflation might be already stabilized. You will be noticing this kind of news. But of course, You cannot take this news too seriously because this is just a statement. Normally, they will change their statement every day. And this is a big proof lah. Previously, Jerome Powell said they want to cut interest rate. And then you can notice the US economics data perform is not good. CPI, NFP, unemployment rate are bad. That's why dollar dropping. But suddenly, in past 2 days, suddenly we do have a few Federal Reserve members give a hawkish statement saying that even though economy is not good, it's slowing down, but they believe that thinks the Fed should be maintain a high interest rates. This statement caused dollar rebound. So you can notice that. So this is the power of the Federal Reserve. So sometimes you cannot take just Federal Reserve statement seriously. You can just digest it and maybe you can just do 1 to 2 days trades, but you cannot trust it like until the end of the year. No, they will normally keep changing their statement one. So as I mentioned just now, there is no one trading strategy that you can apply in your lifetime. You need to keep change your trading strategy based on the market perceptions. So market now is focusing on the Fed statement, so you need to focus on it too. So let me show you the example, the real example that what is the Federal Reserve mentions. So this is the past 3 days statement. We do have the Federal Reserve member Bostic, Federal Reserve official Collins and Mr. Two Guy, Federal Reserve Federal Reserve Chair Jerome Powell. So you can see that all of their statements is mentioning not in a hurry to cut interest rates. Jerome Powell mentioned inflation is still high. They are still not ready to cut interest rates yet. And then Fed official Collins and Mr. say that they still need to focus more on economics data before they decide they want to cut or not. We need to understand that this statement in 2023 does not exist. They say they want to cut rates, but slowly and slowly things out of their predictions, of their expectations, that's why they suddenly changed their statement again. So you need to keep monitoring on it. And then the next monetary policy meeting should be on the 12th of June, 2024. So more than 90% of the global traders are actually expecting the Fed is going to cut their interest rates. That's why nothing special. But what you need to focus on is not whether the Fed cut or not the interest rates. What you need to focus in 12th June is what is their statement in the future. Did they mention they want to cut rate again in future or not? So you need to 100% focus more of their statement. And then just a kind of reminder, later today, we do have the FOMC meeting minutes. So you can also try to digest the FOMC meeting minutes and try to understand what is the perspective for the Federal Reserve right now. So whether they are more tilted towards increasing interest rates or cutting interest rates or even maintain the interest rates. So these are key things that you need to understand and then try to readjust your portfolio. So for new trader, you just need to understand one thing. When the Fed say they want to increase the interest rates, dollar normally will increase. And when the Fed say they want to cut the interest rates, dollar will normally drop because investors will normally save their money in higher interest rates bank. So the Singapore and Thailand example that I made just now, I hope you guys have a brief understanding on it. So interest rates, Federal Reserve, or not only Fed, Fed is just one of the key central bank. In future, we do have the Bank of England, European Central Bank, Bank of Japan. This is all the key things that you need to understand on it. So interest rate linked towards currency fluctuations, which will be benefiting the forex traders if you guys have a great understanding on it. So key thing, very important you need to learn about is the Fed, the interest rates, and how is it going to affect the currency movement. All right. So I hope you guys have a brief understanding about the Feds, the oil, and then next thing that we are going to talk about China is China. So after the post-COVID-19 recovery, you can notice that if we are going to look at the Hang Seng Index, we do notice that we have a lot of news from China recently due to the authorities things. So this is the thing that caused Hang Seng Index drop aggressively previously. But until it dropped the bottom, Hang Seng Index start to rebound back. The reason being why is the Hang Seng Index. To let you know that what is Hang Seng Index is, Hang Seng Index is actually included a lot of major China corporations. So if you believe that the Chinese equity market or the China company is going to perform very well, one of the considerations of investment is Hang Seng Index. So when the Hang Seng Index dropped towards the bottom, the Chinese authority is actually start to step out and launch tons of the economic stimulus plan. So you can notice that they actually implement 3 major plans. The first thing is they actually print money and then inject 140 billions into the banking system to let them lower down, to let them to borrow money, lend money towards more of the people in order for them to build their business, do investment. They just print money that inject 140 billions in the market in order to boost up the equity market. So this is the first step. The second step is they actually increased another 137 billion in central government bonds for infrastructure and disaster relief. And then the final thing is monetary policy. The central bank China is actually reduce the interest rates. That's why investors more willing to do the leverage trading. They borrow money from bank to expand their business. They borrow money from bank and pump it into the market. So this is a key thing, that three big policy that support China, and this is the reason why Hang Seng Index increased aggressively in future. So the questions might be, does that mean that in future Hang Seng is just like might be continue to going up? Actually, it's very hard for us to define like that. It may be the fundamental for the Hang Seng Index is good, but how long will the bullish market for Chinese Hang Seng Index be? We are still not clear yet. So that's why this is where the technical analysis come inside. That I will also discuss about it later. So this is one of the proof that after Chinese stimulus plan was launched, China equity market is very, very good. So in future basis, in 2024, China government might be continue to launch multiple stimulus plan in order to boost up the economy. So when you notice this kind of news, one of the considerations that you can be focused on, you can focus on the Hang Seng Index or the China F50. It doesn't mean that you just focus on dollar, gold, and you don't want to jump out of your comfort zone. Sometimes you can, because news happens like every day we do have the latest news. So as a traders, you need to understand some news and readjust the portfolio. So the more product you're able to understand on it, the more benefits that you are going to get. So Hang Seng Index, you can also feel free to go and understand what is that, and then why is it increased aggressively, and then in future basis, one of the key fundamental that can affect Hang Seng Index to go further or not is what is the stimulus plan from China? What is the relationship between China and US? As you guys know, before the US elections, normally US might do something with China, and they will have a trade war, the discussions with China regarding on trading future trades policy, because they want to win the elections. According to Donald Trump style, they will normally argue with China in order for him to win the elections previously. So we cannot rule out the possibility that happens again. So this is a key thing that might be also slow down Hang Seng Index. But if both countries, US and China, working very well, Hang Seng Index is also one of the good things that you can be focused on it. So you cannot rule out you cannot ignore it, because Hang Seng Index, China equity market is also another huge news that we need to be understand on it. But of course, China economic performance is not just going to affect Hang Seng Index. Other things that will also affect by it, especially Chinese proxy currency, Australian dollar, New Zealand dollar, because China and Australia and New Zealand can consider one of the major trading partner. So if you notice the Chinese economy are perform well, maybe you can also consider Australian as well as New Zealand dollar, because when your clients are very rich, of course, you are the one who's selling them the products, you might be also getting rich. So this is the key thing. And then the next thing is regarding on the oil. As I mentioned just now, oil linked towards economic growth. And then China can consider one of the top one oil importer around the world. China purchased a lot of oil. So this thing will normally, if the China economy is very good, combined with the US, EU country, or maybe UK, this is a thing that will be normally benefiting the oil prices also. So China is just not linked towards the Hang Seng Index. You can try to link towards multiple asset classes, especially for the oil market. All right, so now we are going to understand about the technical analysis that happening in the market right now. And let me do some of the short analysis for you guys. So the first thing that we are going to talk about is the dollar. So as I mentioned just now, the overall reason why dollar increased in 2024 is because of the Fed say they want to maintain a high interest rate instead of cutting it. And then a lot of US economics data are showing some resilient result. That's why since 2024, dollar continued to going up until they hit the peg around here. So you can notice that dollar at first is consolidated in the zone between the resistance level of 106.35 and then support level. This is a feeble support, which is 105.70. But due to a lot of US economics data are performed badly, just like I show you that US CPI data, US unemployment rates, US non-farm payroll, US GDP. This is the data that I pull since the early of May. So you can notice after this poorly performance data release, dollar is actually dropped back. But until certain moment, dollar rebound on the past rebound due to the previous news regarding on the Fed member suddenly changed their statement and say they want to maintain the high interest rates again. So we cannot say this is a market manipulation or what, but sometimes the Fed might be doing things like that. Say suddenly they will likely to say they might be increase interest rates or maintain the higher interest rates. And as a trader, you cannot just digest that US economy is bad and not going to readjust my portfolio. And you can notice some traders take note on Fed segment, and then that's why they cause the dollar to rebound. So if you ask me whether dollar is going to go up aggressively or not in future, I would not likely to recommend on it. It's still better for you to more focus on the short positions, but of course, it's better for you not to focus right now. You can focus until it's break below certain support level, then you only focus on it. Because the trends for the dollar as for now are quite pessimistic if you guys notice on it. So normally I'm not going to do some violet trending things like unless it's break above this downwards line. All right, so for dollar, maybe you can more focus on the support level of 104.65 and it's break below again, then next target, maybe according to people's suggestions, should be maintained on 103.90. But of course, for the new trader, not recommend for you to trade tonight for the dollar market because we do have the high impact news regarding on the FOMC meeting minutes. So you need to stay tuned on it in order for you to do the trades. Next thing that we are going to talk about should be maintained on the gold market. You can notice overall trends for the gold is actually increased aggressively. The overall reason why is the gold so positive is because of a lot of things. First thing should be regarding on the depreciation of the US dollar. US economics performance is not good as expected. That's why investors worry about the recession risk that shift their portfolio towards the gold market. But most of the fundamental that support gold go up should be regarding on the tensions. Tension in the Middle East, tensions between Russia and Ukraine, tension between Israel and Hamas is a key thing that support the safe haven investment. So in 2024, we have a lot of this rising tension news. That's why gold price increased aggressively. So if you ask me whether the gold is going to increase more in future, I cannot answer you because we're not able to predict what tensions is going to happen next. But you need to understand that when you notice news regarding on the rising tension, news regarding on the war, or news regarding on the US economy are entering a recession, this is a fundamental that might normally support the safe haven goal. So you can try to understand this news, monitor these kind of things every day in order for you to have a preparations. All right. And then next thing is regarding on the oil. So normally, because as I mentioned just now, the tensions in the Middle East already slowed down, ceasefire deals are already ongoing between Hamas and Israel. That's why there is no more, the risk of supply disruption already declined. The oil price continue to drop further and continue to consolidate in the zone. But if you ask me whether as for now, it's like the oil, is it good time to sell or not, I would recommend not yet because the war are still ongoing. We are not sure when will the sudden things happens in the market. So it's better for you to try to monitor on the news. If you notice any ceasefire deal between Hamas and Israel, Russia and Ukraine already stopped the war, then maybe you can think that the chances for oil to drop should be bigger. And then the support level that you can eye on can be maintained on 77.75, support level 75.95. But before that, we would be expecting the oil to be continue to consolidate in the zone around here because not only me, the global trader are actually waiting the news regarding updates regarding on this thing. So you can try to understand on it. All right. I think this is a short technical analysis. And I understand that I expand a lot of things in the market, and then some of you might be confusing. And then some of you new trader might not sure where can you obtain the latest updates. You can actually visit our website, and normally we will post into our Telegram group chats if anything's huge events are happening. So we will try our best to update you. And then you can also join our webinar to learn more things in future basis. But of course, other financial resources like Bloomberg, Reuters, Investing.com, Forex Factory, uh, FX Trades is also one of the good resources that you guys can be focused on it. But feel free to visit our Pure Prime website as well as join our Telegram group, and we will normally update you guys the latest market news every day. So if you guys are interested in the analysis that you want to learn about, then maybe you can also type in the chat box. Then I will also try our best to answer you guys. All right. Normally, all of your charts I will be look toward it lah. So if you have any suggestions you want to know about, then you can also let me know, and we hope that we can do for you in future. So this is our Telegram group. Feel free to follow us, and then that's all. Now I'm going to open for Q&A sessions, see whether I'm able to answer you guys a few questions. So Galaxy S9 Plus is actually asking, when considering the world conflict, is that technical analysis too? Actually, yes. You need to apply both fundamental and technical analysis for you to do the trades. So for example, if you are going to look towards the technical analysis trades or you can combine, and then you can notice that currently oil price is actually nicely touched about the consolidation zone between 77.75 here, and then the resistance level 79.85. So you can continue monitoring the news on the Middle East. So if the ceasefire deal really achieved, and then you can combine the first fundamental regarding on ceasefire deal in Israel and Hamas will normally cause oil price to drop, right? But of course, you need to have further confirmations. So you can use the technical analysis to see whether it successfully break below the support or not. So if break below, then another support level can be your next TP level that you can consider on it. Because without technical analysis, you just focus on fundamental, you are not sure what is a good stop loss positions that you can put at and what is a good TP positions that you can consider it. And then you are not sure whether it's a good chance because whether it's break out or not, or maybe sometimes the charts already react to the news even before the news come out. So you can try to combine both using technical and fundamental analysis to consider the trades. You cannot just use fundamental and then you do the trade and close your eyes. Technical analysis will let you guys understand on TP level, stop loss level, and what is a good entry point for you to answer on it. All right, to answer Galaxy S9 questions. And then let me see, we do have more questions. Do you think the news about Euro countries agreeing to recognize Palestinian states will weaken dollar? If you ask me whether there is a direct impact, to answer Mahmoud questions, if you ask me whether there is a direct impacts towards dollar, I don't think so. But if they are really agreeing to recognize Palestine, and of course, if they are really support the Palestine to win the war between Israel and Hamas, then of course this is a thing. If the war going to end, normally investor might be more focused on the gold market. So the whether they are agreeing to support or not, I don't think the process will able to provide a significant impact in the market. And what we need to focus about is when will this war going to end? If Euro country agree to support to recognize Palestine is going to end the war, then of course it's going to affect the gold market maybe to drop further as well as the dollar, because dollar and gold can consider one of the safe haven assets, right? So if no more war, investor might be sell off this safe haven asset, and dollar as well as gold might be both drop together. But you need to make sure that this kind of agreements will likely to stop the war. But if this agreement intensify the tensions between the war, that is another story. All right. So I hope I answer your question too for Mahmoud. And any more questions? Please, how does this conflict impact on gold? Let me see, we do have another questions. So I assume no more questions. All right. So I think that's it for today.